Good morning. It is Monday, September 6th. I'm Zach Howard. Here's morning market update. Thoughts from my notebook today. The top three things that are signaling strength in my notebook. Number one, gold as it relates to gold miners, GDX, ETF. Secondary to that, the cousin of gold, silver, higher lows, higher highs, breaking out to new highs, along our all-time highs with gold, which correlates with a falling US dollar. Gold miners, silver, and weaker US dollar all lining up here in to the back half of September. Into other issues of the market in the notebook, US equity markets continue to show strength, but now the smaller cap Russell Index, the IWM ETF, if you want to look at it from that lens, it seems to be broadening out as a stronger signal than the S&P 500. S&P 500 continues to show a bullish trend, and volatility continues to be crumpled in that like 14 to 16 range, giving a bid into the S&P. But what is giving me an early, maybe cautionary that the S&P stops going up from here is the two biggest companies in the world, Microsoft and Nvidia, are now showing lower lows at the bottom of its ranges, and it can't seem to rally without those $8 trillion in capital. Those two companies getting a bid, it's going to be tougher for the rest of that broader index, those other 495 something names, to make a run for it. Tesla showing higher lows, higher highs, though, which kind of lines up with the higher beta of the Russell. And Google also a big weight in the index, showing a stronger signal. So cautionary on the S&P for now, but the Nasdaq still showing strength, along with, like I say, the Russell. If you're looking at U.S. equities globally, let's go back to global macro for a second. The signal always shows up in the price, and then you get the story, you get the narrative, and talking about the U.S. Japanese bond market is the poster child for all this fiat madness with that yen. And we've seen the run up in those long duration yields over the last couple of weeks, new highs. And what do we get over the weekend? The prime minister resigning, alongside what we had another UK official last week or week before in the UK resign because of this fiscal pressure of this fiat monetary policies are all coming home to roost, and it's going to continue to accelerate around the globe. Canada's not out of the woods either, I don't think. We got a new political leader, but he's in for a world of hurt in the back half of this rest of 2025 with the economic realities there. But like I said, back onto my favorite subject, gold. Gold to oil ratio, we're looking at here a high here not seen since the COVID days, over 50 to 1, 50 plus barrels of oil for every ounce of gold. Gold is expensive to oil, but measuring oil through the fiat lens or gold, two different ways to look at it. If we're looking at the S&P measured in gold ounces, it hasn't gone anywhere in 5 years. Looking at gold, especially from a beta adjustment standpoint of your portfolio, looking at a Sharpe ratio, it continues to smoke all this other stuff. And that will continue to be the theme as the debasement of fiat currencies, now with accelerating fiat debasement in the US dollar, accelerates here. 2025 and beyond. How fast can it go? Like, it's blowing my mind here. I did a video back in April that said gold's about to hit 3,000. We're at 36.50 an ounce US dollar, and not a lot of fanfare still. Higher lows, higher highs. But paper markets are being broke by physical demand around the world. We've seen the Xi, Putin, and Kim do their Eastern Gold Summit a week ago in China. We're seeing more rhetoric come out of the U.S. of just constant fiscal spending with no austerity measures. The dollar is showing weakness. People are going to want a long duration asset, i.e. gold, i.e. Bitcoin. It doesn't have counterparty risk to the U.S. and other fake ass governments. Okay, that's what's going to continue to be the theme. Gold to Bitcoin ratio, though, in my notebook, down to 30.9, the lowest that's been since June 9th thereabouts. So gold continues to get more momentum in this debasement trade ahead of Bitcoin. But longer term, gold and Bitcoin line up with that thesis of all roads lead to more and faster debasement. Chart here, back to the gold to oil ratio. Oil prices over the last 25 years, gold prices over the last 25 years. But the acceleration here in the last 2 years is just unheard of for how much gold usually does not move. It is like a currency because of its volatility characteristics. It is just speaking loudly to me that we are in the accelerated phase of debasement of fiat currencies. And as a result, the gold miners are catching up with the profit margins they're making, especially with oil still being low. Oil energy costs, one of the highest input costs for gold miners. As the price continues to rise, their margins just go through the roof. It opens up the opportunity for buybacks of shares, dividends, pay down debt, capex, or merger and acquisitions. We've seen a big merger on Friday last week in my home province here, Newfoundland. Newfound Gold merged with Maritime, a smaller player that's going to be operational. Going to have to see more and more of that as it plays out. And even over the weekend, we've seen Tether, the USDT stablecoin out of El Salvador, saying they are going to inject some of their capital into one of these tangible real assets. Elemental Altius Royalties, I think the company is. They're going to put $100 million into this gold mining royalty company and look to have more exposure. Tether, the poster child of playing the debasement currency standpoint, not just Bitcoin, now gold miners, the higher beta trade. Interesting. Silver, little cousin to gold in the precious metal. Interesting here, breaking out new highs here in Canadian dollars. I remember I was buying silver coins at 20 bucks an ounce Canadian. They are now up 56 bucks. Gotta love it. What does that say versus the US? The silver debasement price in CAD is faster than US dollar because the Canadian fiat is found faster than US dollar relative to that hard asset, which is silver. Silver industrial metal, going to be needed in all the solar panels, etc. So you got tailwinds on debasement, and along with the industrial AI technology data center, all that is going to give more wind for more silver. Don't forget, silver, probably the most manipulated trade asset out there of any time, anything out there. And physical. We'll break that. Let's end with this great meme here. I did a video with a couple friends on Friday, trading huddle. Brian and Mark, thanks for showing up. I really enjoyed it. But this speaks to kind of what we talked about in our trading journal. Hope you like that there today. I really appreciate it if you could give me a like. Even just a comment, say, hey, what's up, Zach? Let's keep her going. Have a good one.